Hello YouTube! Today we're going to be talking about how we have a pretty bearish signal on the S&P and on QQQ. What I'm talking about is 2 consecutive daily closes below the 50-day moving average because we are already below the 200 moving average. And this is some of the evidence we're going to be using to build out our bear case, which we talked about on the weekend. So another way of looking at it is that the S&P and Dow Jones and the NASDAQ all register their biggest August percentage decline since 2015. This is important because historically, August and September are the periods when we have the most seasonal weakness, September actually being the worst month. So if we have our worst month since 2015, and now we note here that we're getting bearish signals on the daily chart, we're continuing to close at or near the low of the day. And that means that pressure is building up to the downside. Volume's also coming in, so looks pretty bearish to me. When we look over here to our weekly chart, we note that, we're already below our green line, which is going to be our weekly support, and we're quite a ways below it. We're actually poking down into 395.78, I believe is our daily gap. But this is a gap I was watching for a long time. We eventually filled it, and now we're retesting it. So now that the weekly chart also looks bearish because, well, we're still going down and we stopped going up, and this was our period of going sideways, it looks like we're headed for more downside. One final way of trying to look at this, two more ways actually. So first way here is going to be looking at what's been happening on ES, or the E-mini futures, which trades continuously. And I noticed a very similar pattern today than what happened yesterday. We have a micro uptrend, or a small uptrend. Yesterday was on a key number, 40.15, and then right around that 50-day moving average as well. We are above the VWAP, but below the 50 MA, which means the profit and loss is green, but we're below the average price. So that's where we leg down after we lose both those areas and the uptrend. Well, the same thing happened today. We reclaim the VWAP, we lose it, come back up and reclaim it, reject off the 50, and then we go down. So until this pattern breaks, where we go sideways overnight, and then we break that uptrend in the morning, I think we're probably going to be going sideways to down. I think the base case for the bears right now is sideways. So 2 more ways of looking here would just be, we note that we're now looking back to the area where we have the gap. I'm going to hide all the lines so you can see what I'm talking about. And this goes back to early June. So looking here in early June, we have this key area, and our relative high is 395.78. Our gap low is 401.44. What's our high of the day? 401.24. Yep. So pretty much what we did is we back tested the gap, and then we came back down to basically close at the low. This is important because when we look at QQQ, it pretty much has the same thing. So QQQ over here pretty much has that same gap, and it's actually acting a little bit more bullish because it's holding the low of the gap. S&P has already gone back down to test the January 10th high. We're actually inside that gap. So QQQ is now testing this area here. If we have more continued weakness, it means that, well, we're probably going to go to test 295 on QQQ. That's about 1.5 to 2% lower. The final reason why I'm watching these levels into tomorrow is because it's the last calendar day of the month. And when we're told that seasonally, we normally see as much weakness and a little bit more in September than August, August is usually our worst month. We have quantitative tightening starting, and the wheels seem in motion for these bears. So again, 2 daily closes below the 50 DMA. We're now hovering around the gap low, which S&P just lost this morning. So if we open flat on QQQ tomorrow and then decline, I can understand the reasons why. So now going back here to ES, and now looking over here to SPY on the 1-month chart. So this is so critical because, again, a big part of my thesis that we could still go higher was that, well, we weren't going to lose this uptrend. And what are we set to do tomorrow? Oh no, we're set to lose it. Yes, we are. So we're set to lose it. If we open at 395, technically we will be below. So we need to get up here to roughly 400 to reclaim that uptrend. This is a monthly candle, but when we look at this here, oh boy, that does not look good. That is a perfect inverted hammer. An inverted hammer is a reversal pattern. We are closing at the low on the monthly, currently at the low on the weekly, and at the low on the daily. So this tells me that there's pressure building up that wants to shoot down to what? Well, probably minimum test our lows that we staged back in June, which was 362. That's about 10% lower from here, roughly. And this is important because we were talking about how if we're truly repeating 2008, which I laid out on the weekend, and you'll see that video here shortly. All we really have to do is just fade down from here, right? Now that we rejected off of our 50 weekly moving average, if we just come down to the 200 and then reject here, that becomes 2008, where it's going to be easier for us to go down by 50% than it won't. So I think it's really important for us to keep that that zoomed out perspective that, yeah, we got a bear market rally. That's what it was in hindsight, a bear market rally. We're now down more than just a dip. We're now down by 8.5% off the 50 MA. So that's a pretty notable cut. Going back in time again, looking to 2008 and 2000, what do we have? Well, we have the same pattern where we lose the short-term price in the 50, bounce off the 200, and then reject off of the downtrend. Sorry, off of the MA. Same thing happened here. We're above, we go below, test the 200, bounce back up, test the 50. There's a rejection. Death cross follows shortly after. So we've already talked in depth about this, and now that we're seeing the evidence, we kind of have to realize that we have to be mindful of the potential downside. Things could all change with a payroll number on Friday, but hoping and praying is not a strategy. We need to be prepared for the up, the down, and the flat. Just a few more things I want to look at here to note. We were talking about, let's actually go back here to our line chart because good time to check in with our psychology chart. Yep, it's right there at 395. So we're going to be getting that monthly close on SPY. Chart is still technically valid. And because this is a line chart, all that we care about is going to be the next monthly close, which will be September. So is sell in May and go away and come back on Labor Day going to come into play? As of right now, we are down by roughly 4% from our May close. In all things, again, zoomed out with all things considered, it's not really all that bad, but the potential for the downside is now starting to mount. And with the ECB flipping hawkish, we did see the dollar bouncing around, but it's settling here at roughly flat, near its 52-week high of 109. All right, switching gears here too, let's look at Bitcoin. So Bitcoin here, still holding 20K, so the market is fading, but Bitcoin and Ether are holding up. So what does that mean? Well, it means that maybe the thesis I laid out on the weekend is starting to materialize. Those are the only real things I see that are green here on my board as well. We got the 2 and 10-year note up. Inversion is down though, so things are starting to flatten out, which is good. The 10-year note is rising, which just means that long-term inflation expectations are now higher. And there was a data point to support that. We had European CPI come in overnight, which was pretty hot. It was 9.1%. That's high. That's a high number. So there we go. I'm skipping the ADP non-farm payroll today because it's not been very accurate lately. Meta's up. I don't know why. It's the only turd in town, right? Only turd in town. So it looks like it's just getting a dead cat bounce, just like Bitcoin. So is Meta now like Bitcoin? Oh, geez. Only other things that were up were FXI and EEM, which is going to be China and emerging markets. I want to check in on ARK as well. ARK is only down by 3 cents or 0.07%. And it's rocking that 41's relative low or the green line here, which tells me that, hey, well, it tells me that we've probably seen enough blood in growth and in Bitcoin. But if those things were accurate, does it mean that the S&P is now maybe going to not bounce back up into the end of the year and just start fading from here because that global recession is now looking more and more likely? I don't really know there's anything else I have to really look at. There's some things which are coming down, like inflationary, like let's actually flip back over to here, like oil. Oil is now down to 88. This is looking like a reversal pattern as well. But then we're seeing things like corn and things like wheat, which are continuing to go up. So corn, again, there were some bad yield numbers, crop yield numbers. We reviewed those on the weekend. And then also for wheat, I think it's green on the week. Yeah, it is. So up 2%. So there's definitely some mixed signals, but the broader theme is that, hey, well, if we're not fighting the tape says we're normally down in September by the most that we have seasonally for the last 25 years. And if we're not fighting the Fed, I think the Fed has been like, hey, right, pounding on the table and telling us that, hey, well, glad to see the market down. Market's doing our job finally. So keep that in mind as you start to ask yourself where we could go. The last thing I will leave you with, otherwise I would encourage you to watch the video that'll queue up at the end of the end here, would just be, all right, so if now we're thinking about how could this monthly chart play out here? So for SPY on the 1 month, if we're going to get a bounce and then lose it, again, meaning if we get a dead cat bounce into the beginning of September, should you believe it? Let's see if the market does. No, we're still deadlocked on neutral, so 1 point less than yesterday. Market's kind of like, hey, whatever. Like this is all kind of already known. What I would note is if we're going to get a dead cat bounce to start the month off, where I would expect, not where I know we would get a rejection, would be at the 50-day moving average for both. So for S&P to gather up steam for a reversal here, it has to print a daily higher high. So for tomorrow, that means 401.25. It would mean that it needs to get not only to the 50 DMA, but higher. An inside bar tomorrow would be constructive, but it would not be bullish because the volume here is looking pretty strong. So we need that inside bar bull break the next day. Or on QQQ, if we look here now, the high for the day is 304.91, and that 50 DMA is at 305.07. So QQQ, or the Qs, have to get above 305.08 to reclaim the 50 DMA and to print a daily higher high. So with a daily close at the low, it's looking a little bleak here. With all that said, I highly encourage you to watch the video that'll queue up right here right now. And if not, I thank you so much for watching, and I look forward to seeing you tomorrow. Thank you.